Hello and welcome to another MCO update on FET. The FETCH.AI chart continues to be in this correction. I have absolutely no evidence at this point that the correction is over that we've been watching for the last few days. Just a quick reminder that the idea is that a 5-wave move up from the April low is potentially or technically complete. So we have this 5-wave pattern here to the upside. Waves 1 to 5 in wave A, and we could now be in a B wave pullback. Before we dive further into the microstructures, let's also take a look at the bigger picture. Let's take a look at the larger time frame. Here you can see it more clearly that from this swing low in April, we actually have this 5-wave pattern to the upside. Now that could be the beginning of an even larger move to the upside, but it's not a high quality chart overall, because the larger time frame is based on a large A, B, C structure, and from the 2022 low, we've been moving only in corrective structures really. So best, or let's say the most bullish scenario I have available is the idea of an ending diagonal pattern, that this C wave to the upside is moving up in a so-called ending diagonal, which means we completed waves 1, 2, 3, potentially 4, and we could now be in a 5th wave to the upside. But we cannot trust diagonal structures. These are typically not solid structures. They are typically not very stable structures. They are fragile. They often change. They move because they are based on corrective subwave structures. So for example, wave 5 is an ABC pattern, so it's a corrective move. From a chart structural point of view, what we normally want to see is a chart that's moving in 5-wave patterns, also in the subwave structures, at least ideally. Not very common anymore in today's markets, but still, all I'm saying is the context isn't great here, and we just have to remain flexible. But that's just affecting the bigger picture. On the smaller time frame, then, we have very clear parameters because we do have a small 5-wave move up as part of a larger 3-wave move, because A waves can be 5-wave patterns or 3-wave patterns. And the current idea is that we might have started that B wave pullback, which could be a setup, which could present a setup for the next rally, which would be the C wave. So that's how the market could climb higher over the coming months. But first of all, we need to complete this correction. Now, let's go to the smaller time frame then, and you can see that there is likely going to be some structural support in the area from the May lows, so around 65 cents roughly. There could be some structural support. The market is currently moving down. I'm labeling this as a B, C structure, but the microstructure isn't very clean. It's not very clear, so I'm open to the idea that maybe this B wave bounce never happened. So quick reminder, 5 waves up, all done. And now we are waiting for this correction to fully play out. And a correction is typically an ABC structure, but there are many ways how these corrections can be labeled and interpreted. So typically what is more important in these corrections is that we understand what are the key support levels. And they are between 42 cents and 62 cents. So the closer we get, the better the reward to risk ratio. And on the micro level here, it's possible that C wave, the internal C wave of the B wave has already started. So the direct move down, that's at least going to be my thesis as long as the market stays below the green line at around 78 cents. Any break above 78 cents would suggest we've started a larger B wave bounce as shown there on the chart in yellow. So that would just mean A wave down and then a larger B wave bounce before we go down lower. That would not be bullish, but overall, if we break above the green line, it just means the market needs a little bit more room to the upside to play out this correction. That's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you are interested in additional updates, make sure to check out our membership. Thank you very much. Bye-bye.